or what we learn on all of the chapters. So we're
Exactly.
gonna, so we're gonna do on the it's gonna be just question, or we have to calculate too on the, like a periodic inventory and
I can ask you
total and
anything on the exam, anything that you've learned from chapters 2 through 13.
so we're gonna get the calculation too on the other part too.
Yes, yes, yes. But like I said, I can test you either on periodic or perpetual
Or
inventory.
perpetual or
Hmm.
anything with no relation with the 20 other question, the last question,
Yes, this
right?
it's it. They're all going to be subjective. I can test you on any of it. This is just another example of because this one is another example of more or less the chapter 13 where you have to close out the books.
Mm-hmm.
Okay. All
Okay.
right. So here we're back here, right? We finished the unadjusted trial balance. Okay. So now we need to complete the adjustments, right? We're on step 6 and 7. We need to complete
Yep.
the adjustments. So now we could go back up here and see what those adjustments are. So if it helps you, I would insert like a line here to say that these are adjustments. Okay. So let's take a look on August 31st. What does this say?
August 31st, we have a $50 worth of supplies left. We use up to 15.
Okay.
We have to adjust the supplier account.
Yes. So in
Mm-hmm.
this case, let's
Uh,
take a look at my chart of accounts.
yeah, and if I find it, oh, it's here, it's on my hand. Oh, I told you I tried turn, to write everything like that. I have a regular paper too.
Okay.
And, but it's complicated to talk and to do everything together.
No worries. Okay.
Okay, so we have yeah, a chart of account, supplies expense,
Good.
and supply.
Correct, right? Because this time we used supplies, so we need to adjust our supplies accordingly because we only have $50 worth of supplies. So we're going to have a supplies
So first,
expense,
supplies expense.
and what account are we taking it out from?
So supplies. Oh, from supplies.
Uh huh. Okay.
Supplies expense 605 and supplies. No, actually, no. I don't know how it's 15. Sorry.
Oh,
Oh,
okay.
session was
Okay, well, the account
600.
number is 615.
615, yeah, we use 15.
Mm-hmm.
Okay, so
We used
mhm,
15 because we
15,
have
yeah.
$50 left, right?
Mm-hmm. And the 100 also $15. Mm-hmm.
I think this
So at
is, yeah, 104. Okay.
104, yeah, 104 supplies. So adjust the account
Okay,
or adjust
adjust.
for the month of August.
Okay.
What is more correct? Which one?
I mean, I would have just said it's just an adjustment to supplies. Or we used the supplies for the month of August. It doesn't matter.
Mm-hmm.
Okay.
Mm-hmm. Okay. So we go to the ledger. Supplies, expense, supplies expenses on the end. Here we go. So we have the 31st. So here we can write the adjustment adjust from supply
Okay.
or from the adjustment
It doesn't matter.
month of August. Okay, doesn't matter. All right, so it is $15 and $15. Yep. Now we can supplies. There we go, supplies. So we have adjustment. And is I got the first, sorry, and it is on the credit side 15. So we're supposed to have a 50 on the right
Correct.
side.
Okay, good.
Yeah, that's all. All right, so we do the adjustment here.
Okay.
So we continue because later we have to do the trial balance again, no?
Mm-hmm.
Mhm. So the next one is depreciation 1 month of a cash register, 3 years life. Oh, so we have to do straight the method from the register.
Yep. Okay. So right here, down below, underneath the unadjusted trial balance and the periodic table, I provided a depreciation table for you. Okay.
Here we go.
Okay.
Yep,
How much did
is the register.
is the
The
register?
reg-
Yes.
285 and 60 cents.
Okay.
So this is the cost, 285.60. And let us see, the salvage cost is zero.
Mm-hmm.
Salvage, no, and the life 3 years.
3 years. Correct.
Okay, 3 years. All right, so we have depreciation basis is 285 and 60 cents.
Right, because it's asset cost minus salvage value, which we know salvage value is 0. So that leaves us with $285.60.
Okay, now the rate it is 1 divided by 3 years, by 3, or
Correct. 1 divided by 3.
it is 0.33333.
Okay.
Okay, and the expense it is, I'm gonna keep the 3 time 285.60, 95 to depreciation expense. That's for the full year.
Okay, good.
So divided by 12.
Okay,
Divided by 12 is equal 7.93.
good.
Let me write here just 1 month because I remember, but I always forget. I have to think the time is too big because the number is too big. So it's the same for the depreciation, the accumulation depreciation,
Mm-hmm.
793, and the value 85.60 minus 7.93. So we have a 277.67.
Okay. 67. Okay.
Mm-hmm. Yeah, I keep all the decimal on the calculator, so more accurate. Okay, so now we have to journalize that, right?
Yes, that's correct. How do you journalize depreciation?
Properly. I don't know. Let me think. All right.
So
So
let's look at it for a chart of
chart of account.
accounts.
Yeah, the chart of account. Yeah, that's what I guess. Okay. All right. So we have a depreciation expense.
Depreciation expense, okay?
We don't have anything specific, right?
Mm,
And register, cash register.
what is the rule for that one? Can you actually decrease the value of the actual cash register?
It is. If I can decrease the cash register, decrease his value. That's the depreciation, huh?
What about the historical cost? What does that tell you? Can you actually record your asset at a lower price every single time?
No,
Well, no, you can't because the
Okay.
historical cost says you have to keep it, whatever you purchased it for, you have to keep it consistent throughout your entire books. So, what do you see there?
Income expense, income summary? No, not yet.
It's not an income or an expense.
No, it was an expense. It is an, see, where is it? Cash account. Accumulation depreciation.
Yes, good. Accumulated depreciation for the cash register right there, 115. Okay.
Yep.
So let's journalize this. 831.
What we have depreciation expense
Mm-hmm.
and accumulation depreciation register.
Okay.
Mm-hmm. So the first one it is 650,
Okay.
and the second one it is 115.
Okay. So what? How
So
much
seven
did we do? $7 and
and $7 and I lost the paper. Sorry, $7 and how much? See, $7.93.
yep, $7.93. Okay.
7.93. Yep. So we have to journalize that too on the ledger. Because the journalize to go into the ledger. Sorry.
Okay, I'm gonna make a note here to depreciate
For the month of
for
August.
August. Yep. Okay. And then you said we had to put this in the ledger?
Mm-hmm.
Okay.
Here we go. So this is supposed to be on by the end, huh?
Mm-hmm. It's the very last table, yes.
So depreciation for the month of the register of the depreciation register month of August.
Okay.
Mm-hmm. And 793.
Okay.
Mm-hmm. And 793. So there we go. First, and then accumulation depreciation. So say depreciation register month August
Okay.
for 783. 793.
Okay. And then what's the last thing that we have here? The last adjustment.
You have 18 coffee mugs on hand.
Okay.
So the inventory.
Inventory.
Actually, the inventory. Yeah.
Okay. All right. So here's the inventory table. Right. I just shortened it up because I shortened it up. So how many coffee mugs do we have left on hand? 18, right?
18. Yeah.
Okay.
Mm-hmm. I cannot find the depreciation account, but it's okay. Here we go. Yes, so we have the same with the total 100 Purchase 100, one $25 freight, and 1.25.
Okay.
So the same information on the bottom.
Mhm.
Okay, so we have an ending. What is the purchase expense? We don't have any purchase expense.
That is the
Okay, so
that's already there. In this case,
Mhm.
the purchase
Under
expense is there.
So we sold 82.
82, right? 100 minus 18 gives you 82.
82. So we just have a $1.25. So we have a to multiply each for $1.25. No,
Mm-hmm.
we don't have anything else.
Which equals what?
$1.25. 86. Let me just second. I make a mistake too. 82 times 1.25. 102 and 5 cents.
Okay.
To 105 cents. So if we have minus 125 equal 22 50. 22.50.
Good.
That's all. We don't have anything to do else. Yeah.
Okay. So then what do we do here?
We have the conversion entry.
We need to do the conversion entry. So what is going to be in my conversion entry?
Cost of goods sold.
Cost of goods sold.
Okay, we have an ending inventory first.
So let's take a look at my chart of accounts. What would my inventory be?
Let me see. Coffee mug. No?
It would be coffee mugs. Good.
Coffee mug. All right.
Okay, you mentioned cost of goods sold.
Oh, cost of goods sold, yeah.
Okay. What else?
So, okay, we have a purchase expense,
Purchase expense, okay.
freight expense.
And freight expense, okay.
I learned. I did. Not that I don't know. I just have to back all over to everything.
Yeah, absolutely. Okay. So what are my account numbers first?
Let's see. Let's start for Coffee Max 104. Okay. Sorry, I tried to write 100 for Coffee Max. We have cost of goods sold. 506. Purchase expense
Okay.
605. Yeah, I find it. For every single account of 605. Freight expense it is 601.
Okay.
All right, so now
So what was the total value of my ending inventory?
it's 22 and 50 cents.
Okay, good. What was the total value of my ending inventory?
The ending was 102 and 50 cents.
Okay. What was my purchase price?
The purchase price was 100.
And my freight?
It was 25.
All right.
So it's supposed to match 125.
Yep, correct. It does match 120, yes.
So this is the adjustment from the periodic inventory, just
Okay.
or conversion entry.
Yep, conversion entry. Whichever one you want to put, conversion entry.
Entry, yeah, that's periodic inventory. This the conversion entry is the periodic.
Okay.
Okay, so we have to journalize that.
Okay.
Mm-hmm. You go to journalize to ledger.
Okay.
Whichever is right now. Okay, so we got first of goods sold. No, first coffee mugs.
Okay, coffee mugs. Okay.
Coffee mugs for $22. So this is a conversion entry.
Okay. You could say what the ending balance was.
Uh,
18 mugs.
19 mugs. Okay.
Okay. We're on still page 2.
Mm-hmm.
For how much?
And for 22.50 cents.
Okay.
22. Okay. All right. So after this, we have cost of goods sold.
All right. Cost of goods sold.
Mm-hmm. The same conversion entry. Entry. Do you want to put the 18 marks or it doesn't matter?
Mm-hmm.
18 marks. Okay. So we have 102 and 50 cents.
Okay. 102.50.
Mm-hmm.
Okay.
Yep. And then we go into purchase expense.
Purchase expense.
So we have conversion entry.
Conversion entry.
Mm-hmm. So it's supposed to be 100 on the credit side, so the balance is going to be 0.
Okay. So it'll be 100 on the credit side to bring the account 0. Okay.
Mm-hmm. Yeah. I have my husband here, is so noisy. So, freight expense.
Okay.
There we go. So we're gonna close this account too.
Okay. So
Conversion
conversion.
entry. So we have $25 in the credit
$25 on the
and
credit.
0 the account.
Okay.
So we're done with that. Sorry for
No
that.
worries. All right, so here we are. We just finished the purchase expense, right? We zeroed that account out, and then we just zeroed out the account for the freight expense. So
Mm-hmm.
we are done with our adjustments. So now we need to do the next thing is going to be doing the adjusted trial balance. So in this case, scenario is completely done. So that means let's go ahead and process step number 7 here, which is to do the adjusted trial balance. Okay, so therefore we're gonna have to go through all the accounts all over again, but this time we can we'll have different numbers. Okay,
Mm-hmm.
so let's start with here, the adjusted trial balance. So what's the first account that we have on the list?
Supposed to be checking.
Yes, right. We still have checking, right? We didn't do anything to checking. So let me go ahead and confirm that. So checking is first. All right. What is the amount in my checking account?
It is 11,199
Okay,
and
so
1 cent. The same.
so it's the same 11, 199, 21.
21.
Okay.
Mm-hmm.
What account is next? Your cash account, correct?
The cash. Mm-hmm.
All right.
Cash.
Let's go ahead and take a look. How much is in your cash account?
2356 and 89 cents.
Okay, so 2356.89. Okay.
Mm-hmm.
What account is next?
We have account receivable, not 0. Sorry.
Not accounts receivable.
No.
We have to do it in the
Coffee mug.
exact order, right? No accounts receivable. Coffee
No,
mugs is next.
coffee bags.
Okay, for
mugs.
how much?
Coffee mugs we have for 22 and 50 cents.
22 and 50 cents, okay? All right. What account is next?
Supplies.
Let me see. Next is supplies.
Supplies.
Okay. How much do we have in our supplies left?
102 and 50 cents.
We're on supplies.
Something is on here. No, we have a 50. Sorry, $50.
Okay, so good. So $50 left in our supplies. So supplies, $50. Okay. All right, $50 left in our supplies. Okay.
All right. So now we have a cash register.
We have supplies, cash register. Okay, for how much?
Cash register for 287, 85 and 60 cents.
Okay. All right. What account is next?
Accumulation, depreciation.
So supplies, cash register, accumulated depreciation for how much?
For 793.
Okay, on the debit or credit side?
On the credit.
Okay, so good. So therefore, we need to put the accumulated depreciation for the register. And we're going to put it on the credit side for $7.93.
$7.93.
Okay. So then what account is next?
The next one, it is account payable. Nope.
Account payable, nothing.
Sales tax.
Sales tax, okay.
Sales tax.
For how much?
Sales tax is going to be $40.52 on the credit.
Okay, so on the credit for $40.52. Okay, and then what is after that?
Business loan.
Business loan.
Business loan for $50,000 on the credit.
Okay. All right, what's after business loans?
Business loan, we have the sales.
Okay, no equity or income summary. So with the next thing we have is sales for how much?
Sales for the 509 and 15 cents.
509 and 15 cents for sales. Okay. And what's after sales? I think we have sales.
Sales returns.
Okay. Okay, for how much?
1797.
1797. Okay. What's after sales?
This is yes, it's credit 1797.
That's a debit. It's a debit for 1797.
It's a debit side.
Okay.
Yeah, 1797.
Okay.
And then we have cost of goods sold.
Cost of goods sold. Okay. For how much?
For 102 and 50 cents.
Okay. So we have cost of goods sold for 102.50. I think we need a couple more lines. Sorry, I did not provide enough. Okay. Okay, cost of goods sold. Okay, what's after cost of goods sold?
Freight expense.
Freight expense. And there's nothing there. Okay, what's next?
Purchase expense.
Nothing there.
Rent expense.
Rent expense is next. Okay. Rent expense is next.
1,500.
For 1,500. Okay.
Supplies expense.
Supplies expense. Okay, there supplies expense.
For $15 and the debit.
For how much? For
15. 15.
okay, 15. And then what's the last account that we have here?
Depreciation expenses.
Depreciation expense for
So, 797.
793.
793, sorry.
For $7.93. So in this case, I'm missing one more line on this table. So
798.
okay.
Okay.
So then let's go ahead and tally up our totals.
Okay, let me see. Okay, this side it is 15, 7, 6. Let's see the other one. Yes, it is matching 15,557 and 60 cents. And it is matching both sides.
So 15,557 and 60 cents.
6 cents. Yep.
Okay, so let's see. 3 plus 2 is 5, plus 5 is 0. Okay, 9 plus 5 is 14, plus 1 is 15. Wait. 9 plus 5 is 14, plus 1 is 15. Plus 1. Okay, 6. Okay, good. All right.
Got it.
So now we completed step 7. So now we need to complete step 8, which is to complete the financial statements. So we have the adjusted trial balance right here. So let's go ahead and plug our numbers in for the income statement. So how does the income statement work?
Okay, so we have all the income, operating income first.
Okay.
So let's go upload the number and the sales. Oh.
Good. Sales. Sales is the very first operating income. Okay.
So sales.
How much was our sales for?
The sales it was 509 and 15 cents.
509 and 15 cents. Okay.
We have a sales return.
Okay, sales returns and allowances. Okay. Does that increase or does that decrease sales?
This is it decrease.
It decreases it by how much?
By 1797.
1797. Okay.
Oh, so put it on the same. It's not debit and not credit. It's hard to do that. No debit and no credit when you have all these. And then we have a sales return. Oh, we did it.
We just did sales returns and allowances. Okay.
Cost of goods sold.
Cost of goods sold. Excellent. So cost of goods sold, because we need to find out how much money we earned strictly from sales. Okay. So in this case, how much was your cost of goods sold?
102.50 cents.
102.50 cents. So therefore, it subtracts it
That is 501 minus 553 minus 1.497 is 388 and 68 cents.
388
68.
68. Okay.
Mm-hmm.
All right. Good.
Yep. Now
Now, what
we're
is
going
your
to
all of your operating expenses?
expenses. Okay, so we have a rent expenses.
So let's take a look. First thing we have is rent expense. Good.
Mm-hmm. Rent expense.
For how much?
And for the $1,500.
$1,500. Okay. What else do we have?
We have supplies expense
Okay. For how much?
for $15.
Okay. And what else do we have?
The depreciation expense for $793.
$793. Okay.
We say expense or expenses is the account.
Just depreciation expense. That's it.
Expense.
Mm-hmm.
Okay.
So what's your total operating expenses so we can subtract it out?
793. Let me see. 115 plus 7. So we have a 1,522 and 93 cents.
And 93 cents.
293.
Okay. So it's negative because operating expenses, right?
You have to take it out.
You have to take it out.
Mm-hmm.
Okay. Did we have any other income?
Nope.
No. So what is my total profit or loss?
Let me see. So we have a loss for the
Mm-hmm.
1,522.92 minus 388.68. 1,134.25, and it is a loss.
It
We
is.
write negative or we write just loss?
In this case, right? It's it says right here net profit slash net loss. So in this case, if we do put a negative, that means we have a loss. Okay. If it's positive, it means we have a profit. So in this case, yes, you do need to have that negative in there. Mm-hmm. So there you go. We have a negative amount. So that means we have a net loss of $1,134.25. Okay.
Mm-hmm.
So then let's go ahead and complete the statement of equity.
Okay. Mm-hmm.
So what was my beginning balance of equity as of August 1st?
It was $50,000, no?
Where can we check our equity?
And just balance, no?
You could try. Yeah. Did we even record any equity under our adjusted trial balance?
No, no. There are assets. There are what we have. Cash and no, we don't have any equity.
We don't have any equity.
Actually, no, we don't have any equity.
Because that $15,000 that you're referring to is a business loan, right?
No, it's a business loan. Yeah, we don't have. Yeah, it is no.
We have zero equity. Okay.
Mm-hmm.
So if we started out with zero equity,
mm-hmm.
Okay. What's next? What else do you need to calculate in this?
The equity withdrawal from the owners, no?
Did we have any owner's equity?
No.
Equity withdrawal?
No.
No.
And contribution, no. So that's all. You have to put something here.
You have to put something here.
The lost That we have.
You have to put the net loss here because in this case, you have a net loss. That means you have to take that money out of somewhere. Okay? Because in this case, right, that means the company has to pay for this loss. Right? Where the net income, that means you gain extra money. That means you can pocket that money if you want. But when there's a loss, that means your company has to pay for that loss.
To pay for that. So the owner equity is going to be the minus 1,134 and 10%.
Yep. So therefore, the ending balance of your equity as of August 31st is negative 1,034.25. Okay. Okay.
Get it? Because we did positive. Actually, we invest the money back. So and we have.
Well, we borrowed $15,000, so we never even had money to invest in the first place. Right? Because we took that $15,000 and we just bought a bunch of stuff.
Yeah.
Okay. We haven't paid him back yet, so we have no equity to begin with. We have a negative equity. Okay. So then, let's go ahead and compute
the balance sheet.
The balance sheet, yep.
So we have to do the asset.
Okay. What's your first asset?
Checking.
Checking. Good.
Okay. So we have you want to write the amount 1,199.21.
So 11,199.21. Okay. What else is considered an asset?
Cash.
Cash. All right. How much cash do you have? Let's check your adjusted trial balance.
2,356 and 89 cents.
Okay. What else is an asset?
We have the supplies and coffee mugs. Coffee mugs.
We have coffee mugs.
For $22.50.
For $22.50, okay. What else do we have as an asset?
Supplies.
We have our supplies.
For $50.
For $50, okay.
The cash register.
Okay. We have the cash register. Okay.
For $285.
Okay.
60 cents.
So what do you do here? Because we have an accumulated depreciation. What is accumulated depreciation?
Is it a loss?
It's not a loss.
So how we call that? Is a depreciation.
Right. But what kind of account is an accumulated depreciation?
It is a credit.
It is a credit, right? But okay, so in this case, if it's a credit account for the register, what do we call that?
Is a contra account.
It's a contra account. Okay, so I have to record the cash register as what? Because in this case, right, my balance sheet, does my balance sheet tell me that I have a debit and a credit?
No.
No. So how do I calculate my cash register if I have a main account and a contra account?
We're supposed to balance the account. We're supposed to adjust our account.
Correct, because in this case, right, the balance sheet doesn't give me a debit or credit side, does it?
No.
So what do I do with that debit and credit because they're contra accounts, right?
So to adjust the register cost.
Correct. Now you already done that. Where did you do that? You did that in your fair market value, right? In your book value.
Oh, so that So it is 277.67.
Yes,
Okay.
yes. Mm-hmm. 277.67.
277. Oh, so okay. 67. Let me write the note here. Depreciation. All right. So we're done with the asset.
Okay.
Now we have the liabilities. So we have the taxes,
So liabilities, we
sales tax,
have sales tax.
sales tax. Mm-hmm. 24 for the 1797.
So liabilities, we have sales tax payable for
Mm-hmm.
how much?
1797.
1797 for sales tax.
Yes. No. Let's see. No, it is. It is here. 4052. Sorry.
4052. Yeah, that was the sales returns and allowances. So,
And I didn't apply to the 4052. Yeah.
okay.
I just see. Let me see. And we have a business loan.
Right. The next thing we have
$15,000.
is the business loan for $15,000. Okay.
Mm-hmm.
So business loan
Write it on the other side.
for $15,000. What's my new equity?
Oh, minus 1,034.25.
Okay. So let's go ahead and test the accounting equation.
Mm-hmm. Let's see if it's matching. Supposed to.
Yes, it's supposed to match. Yes. So in this case, what's your total assets and what's your total liabilities?
See, so we have a 1,190, 2, 3, 5, 6.9, 2, 2, 5, 277.67. Okay, the asset is 3856.27.
Sorry, say that again. What was it? Total assets are
13,856 and 27 cents.
okay.
Two plus 1,500 equal minus 1,134 is 0.25. I don't know what did I do. 1 second. Mm-hmm. That plus 40.52. Okay. Minus 1,134.25. There is no matching.
What was the number again?
13,906 and 27.
900 and
Yeah, maybe I make a. Okay, maybe I make a mistake on the other one. Okay, let me see. 15,000 plus 40.52. Okay, minus 1134.25. It is 13,906 and 27 cents.
okay, so I heard you for the assets that you got 13,856.27.
Yeah. So something had to be wrong there.
Okay.
Let me see. 277.67 plus 50 plus 22.5 plus 2356.89 plus 11.99. No, 9 is okay. I make a mistake.
Okay, so it is
It is the same.
13,906.27.
3906.27.
Perfect.
Yep,
So there you
that
go.
makes sense.
We solved that our total assets equals our total liabilities and equity. Okay?
Mhm.
So last step we have here is to close out the books. Okay, so how do I close out the books?
So we have to close the how you call that the account.
The temporary accounts.
Mm-hmm.
Where do we close them out to?
The journal.
Okay, but where? What account do I need to close out my accounts to?
The income and the expenses.
Okay, we're closing our income
The
and our
summary.
expenses into, okay,
Yeah.
good, to the income summary.
Income summary.
Okay, so let's take a look, right? We have a whole bunch of accounts, right? So our first account that we're going to do is our revenues, right? Because that's the first account that we're going to be looking at. So in this case, right, how do I close out my revenues?
Your revenues. Uh, so the credit and debit. You have to balance them.
Okay, so in this case, my first one is sales, right? My first income is sales. How do I zero out this account?
So we put it on the positive. Okay. Here is credit. So on the debit, 509.15 cents.
Okay, that's good. So that's the first thing I'm going to do in my journal is that I'm going to credit, I'm going to debit. So 831, I'm going to debit my sales. Okay?
Mm-hmm.
For 509.15, right?
Mm-hmm. So, okay. All right. So then later you go to the ledger. Okay, 509.
Yeah, I'm going to do that. I'm going to do because I don't have both ledger and the journal separate.
Yeah, that's not Excel, right?
Yeah. So sales was account number 401. Okay.
Sales, here we go. So we're gonna zero the account on the debit side.
Mm-hmm.
Zero and so
Okay.
509. 509.15, right?
Mm-hmm. 509.15. Okay. What else are we going to zero out?
The sales return.
Sales return allowances, right? That's the last revenue here. Now, how do I zero this account out?
The debit, we credit the account on 1797.
Okay, so we're going to credit sales returns and allowances.
Mm-hmm.
Account
It's 1797. Account
1797.
405.
Okay. And then last but not least, we need to close this out to
what was the other one? So, which account we have more? Sorry, after the freight, no freight, no purchase expense, no rent expense, no, no, we are on sales.
Are you looking for the account that we're zeroing them out to?
Oh, that's all. We finished, no?
Yep, that's correct. That's it. There's no more revenues. Everything else is our expenses. So in this case, what account am I zeroing them out to?
Income summary for the difference.
Good, for the difference, okay? So income summary is account number.
Income summary, it is the account, it is, let's see, 390.
Good, all right. So how much am I going to credit my income summary for?
6, so 509.15 minus 17.97, 491 and 18 cents.
Okay, 491.18. Okay, so then, right, I'm going to say,
so we close the revenue, okay.
Close revenues. Okay, so now we need to actually close out each account. So ledger.
We close them, no? Yes.
So I'm going to do that right now. So sales account.
Yeah. Oh, I did it before. Ah, maybe that's the reason I know.
Oh, okay. So you already did it. So okay. Let me go ahead and catch up. So here, so sales. So it's 831. I'm gonna write close. We're still in journal 2, and we closed it out for 509.15 to bring this account balance to 0. Okay. Then we're going to zero out my sales returns allowance.
Sales returns.
By crediting 1797 to bring this account to 0. Okay. And then now I need to update my income summary. Oh, let me find it. I think I went up too far. Income summary, okay? 831 and
business close. Revenue.
okay. And we're gonna credit for 491 and how many cents? 18.
Yes, 491.18.
Okay, there you go. All right. So then now we closed out our revenues. Now we need to close out our expenses to the income summary. Right?
So now we're going to the same. So we start for the expenses. So we have the rent.
Hold on, income summary. There's one more before rent.
One more before rent.
Yeah.
Purchase, freight, nope. Cost of goods sold.
Cost of goods sold is yes. So in this case, we have cost of goods sold.
My paper is print half on the other page.
No, okay, no worries. Yeah.
Okay,
so
rent expense and the cost of goods sold was 102.03 cents.
102.05 or 50 cents. Okay. So cost of goods sold, we're gonna credit it for 105. Oh wait, 102.50.
Yes.
Okay. Cost of goods sold is account number 506.
Let me see. Oh, 506. Yeah.
Okay. All right. So cost of goods sold. I'm gonna go ahead and zero them out while I go. Okay, since that's what you did, right? So here you go. Cost of goods sold. I'm gonna go ahead and 831 close. Okay, journal 2, and we're going to credit this for 102.50 to bring this account balance to 0. Okay.
To 0.
Okay. What's next? We don't have any freight and we don't have any purchase or purchase returns. So what's the next account?
Let me see. So we have a rent expense for 1,500 in the debit side. I can move that away because I have to. Okay. Here.
Okay.
Rent expense. It is the account. It is 610. It is $1,500 in credit side. So we have to 0, 1,500 and 0. Okay.
All right.
So now
so we zero out costs. Okay. We have no purchase, no
purchase.
We closed out rent expense. Okay, so now we have 2 last account. So let's go ahead and go through it. So supplies expense, right? How much? So we have to close out the supplies expense for how much?
$15. $615 the account, and it is $15 the balance.
Okay.
That's right.
So, sorry. We're going to do supplies expense.
Okay. So, yeah, supplies
for $6.15. Did you say?
No, for $15.
No. The account number.
Oh, 16.15.
Yeah, 16.15. For $15. Okay.
$15.
Okay.
Yep.
Last account on here. What is it?
It is the appreciation expense for $7.97.
Okay. For $7.97.
Mm-hmm.
I have it for 93
7.9.
cents.
Oh, you're right.
Okay.
It's 7.93. Sorry, and count is 6.50.
Okay, so depreciation expense.
Okay, so we have 93.
Count 650 for $7.93.
Mm-hmm.
Okay.
That's right. So now we have.
Okay. So what is the total amount that I must debit my income summary for?
1,625 and 43 cents.
1,600
25 and 43 cents. Okay. Yep.
Okay.
Mm-hmm. Now we have to then go to the ledger to credit
To debit
to debit
for
the account.
1625.43.
Yep.
Okay, so income summary is right here.
Yeah. Close expenses. Oh, do we write that is something in the ledger? Close expenses?
I already did.
Oh, I didn't.
Okay, so
Month August. All right, so we're going to the so close expenses.
mm-hmm.
So we have added 1,600 and the debit 167.25 and 43 cents, and the difference it is minus 491.18. So we have a 1,134 and 25 cents, exactly how it is on that.
Good on the income summary, right?
Mhm. Yep.
So in this case, what's the last step I need to do?
The equity.
Yes, we need to close out income summary to the equity. So right now, what balance do I have in my income summary?
In the income, 1,100 and give me 1 second. 1,134, right?
Yep, but is it a debit balance or is it a credit balance?
It is debit balance
Okay, so how do I zero out my income summary?
on the other side.
Yes, so in this case, I have to.
Adjust adjust my equity, no? Or how we call that?
How do I zero out my income summary? Do I debit or credit?
We put it. Oh, here we debit.
We're zeroing out my income summary, right? Right now, I currently have a debit balance
Oh,
of.
sorry, we credit. So.
Good, right? We're going to credit my income summary by 11,003,425. So therefore, if I'm closing it out to my equity, am I going to debit my equity or am I going to credit my equity?
You're gonna credit your equity.
I already have a credit in my income summary.
Okay, 1,134 is on the debit side, right?
Right. How do
So
I
we
make that
have
account to zero?
on the credit side, you have to balance.
Yes, so you have to credit my income summary account, correct?
Yes.
So
Oh,
then how so do I debit my equity or do I credit my equity?
you debit your equity.
You debit your equity. Okay, so
Yeah,
good.
sorry, I'm on the same. That's what I was.
No worries. So in this case, right, because of the situation here, right, we have a loss. So in this case, right, we have to debit our equity. We have to decrease our equity because we have a loss, and we have to credit our income. Oh, excuse me, income summary. Okay?
Mm-hmm.
So if I have to debit my equity and credit my um, income summary by 1134.25. Okay.
Mm-hmm. So that's all. We have
Okay. Well, we still have to debit my equity, right? We still have to debit my equity. So in this case, right, if I debit my equity, because I already credited my income summary, right? My income summary should be now $0 because I credited my equity for 1134.25. Okay, so now I need to debit my equity, right? 831, close income summary. Okay, on page 3, and I end up debiting my account for 1134.25. So therefore, that means I should have a negative amount in my equity, right? Because in this case, right, does this tell me I have a profit or a loss? If I'm decreasing my equity, what does this mean?
you have lost.
Yes, you have a loss. So therefore, right, that's exactly what my statement of equity tells me, right? That
Yes.
I have a loss. Statement of equity, I should have a loss of negative 1134.25. Okay, which we calculated that to be true. Okay. So there we closed out all of the book, all the accounts. So last but not least, we have to do the post closing trial balance, which once again, if we have a negative equity of 1134.25, then your balance sheet is going to be your post closing trial balance. Okay.
Again, can you back to that, please?
Okay. Okay. So because we got the same number, right? We got equity to be
Yeah.
negative 1134.25, right? That means
Yes.
our balance sheet is going to be my post closing trial balance. Right? Because all of these are my debits and all of these are my credits, right? They're all going to equal the same.
Yes.
Okay? So therefore, that is how we do the whole entire accounting cycle from steps 1 all the way to step 10. Right? Any questions? So again, this is going to be this is what I'm going to be asking you on the exam. Not this particular one, but this is going to be an example, right? 20 questions that's going to involve 10 journals, right? And then a series of questions in regards to the doing the either or adjusted trial balance or unadjusted trial balance. Okay, I'm going to ask you some adjustment questions, right? Maybe you need to solve for depreciation. Maybe you need to solve for something else, right? So here is a great example. I'm going to post the answers to this on the Google Classroom so you have this to practice at home, okay, for the exam.